Sup, y'all? How's it going? Ooh, just bumped my desk a little bit. Fantastic morning going on. Actually, I think this might be one of the first streams I do public. Because why not? Why not? Why can't I? So, for all you public folk, I've just been doing unlisted YouTube videos for ages because I trade all day and I need to have a good trade plan. And I do trade reviews, etc. I am market structure first and order flow second, and a whole bunch of stuff in between. I use TradingView, Market Monkey Terminal, and Bookmap. So we're going to get into our trade review today. I just want to point out something cool I noticed yesterday. I was just doing yesterday's review. I'm going to cut over here. This volume yesterday was so cool, and I think it was very predictive of what price would do, at least bouncing off of this SFP. If you just look at our CVD here yesterday, you'll notice we had a huge jump up in like a very odd spot in these two little areas, and that's these two little giant market orders. And if we zoom in and we look at a footprint chart, that was some big, large, like $50 million positions in there, which is a lot of money. And I also want to point out that when we look, 90 million in there, wow. So I also want to point out that, one cool side note is that all of these major market orders were preceded by a smaller market order of like a tenth of the size, which is something I haven't ever noticed before. But I also want to point out that when we had this massive inflow of CVD and then we came lower than this low, we didn't see these positions getting stopped out. I think the people we saw getting stopped out were from this low. These are like these guys' stop losses, or I'm sorry, this one right here. I think these are kind of all the stop losses put, and it looks like it was a good mix of spot and perps. But these players, it seems, were still in the market, and maybe I'd be interested to know what exchange they entered on. Oh, what are you doing here? This is going to take a second to click through. I don't know why this is being so slow today. So it seems to have been Binance. Pretty typical. Pretty typical. So anyway, we're going to go ahead and look at the outlook for the rest of the day. And I want to do a little brief go around over yesterday, or last night, I mean, because I just did yesterday's trade reviews, and my performance was pretty poor, honestly, but it doesn't really matter. What the hell happened to my music? Huh? Let me not show you the weirdo music. Oh, I guess you can see it. Anyway. All right, so I want to go over a little bit what happened last night, because we did have that Model 1 distribution, which was very clear-cut, picture perfect. I want to look at the CVD when that happened. I want to look at what was going on there. Then I want to check out value, because we are value traders. We are trying to determine if price is correctly valued, undervalued, or overvalued continuously. And then find spots where price and value do not match and make profits on the difference. So if we just turn this off here, I do want to look at our daily value. And I will make this big. What's going on here? Come on. These can get deleted. All right. So we opened up here. We tried to push for higher value, but ultimately got stopped there at this Model 1. Tried to push lower value, couldn't do it. And then we pretty much just ranged, and we have this whole kind of consolidation at the top here, which has very similar value area. Let me make sure this is at 68. The other day I noticed I was on 80. I'm like, what am I even trading right now? It's not even a standard deviation. But anyway, so now this morning, after this Model 1, this distribution pattern seemed to take a long time to play out. We did break below value and we shifted it lower. So we are now currently, we're still overlapping the higher. So if we look at yesterday's value area and compare it to the current, this morning we were right here, we were higher. We weren't even overlapping, but now we're overlapping the higher. So it's like a little less bullish than maybe just higher would be, but we'll take a look at that when we look at daily value charts here. And then I do want to note that the reason we came down here, we can quit looking at this, but we have like this distribution to accumulation, and that's causing us to have this wider range in this area here. So if we just look at, maybe I'll make this big so we can check it out. If we look at our market structure, and maybe we'll do a little bit more of a step back today, we've been in this whole large range just consolidating. And that could be for a couple reasons. I've seen some good stuff by some guys doing it. First off, huge liquidity curve down here. That would be pretty easy to take out. You also have this distribution at the top here, Model 1, distribution. So it seems like we're distributing. We're preparing to go for a swing down. But that could look like a couple of things. That could look like this, just coming down to make an SFP. That could be making an SFP for a Model 1 accumulation. That could be coming down and breaking this low and getting into some of these juicier levels down here. It could also just, I really don't think so, but I mean, maybe we come up to all-time highs. I'd say that's probably like the lowest probability from here, especially looking at these lows getting taken out. But a good possibility also is we come up to some of these levels and then ultimately get rejected. So there's a lot of things that could happen here. Really none of which I'm going to trade because I'm a scalper. I hate swinging. But I guess it's good to know a macro direction, especially when you're in scalps and you find yourself fortunate enough to hold them and kind of turn them into a swing. I call that the gravy. The gravy train can be really rewarding, but if you get caught up in it, if you get caught up in the gravy train, if you're hunting for gravy when it should really be a scalp, that's when you're being dumb. So anyway, good little macro outlook. So we're in this range after coming down a lot. It's kind of similar, right? We have this low that we put in, and now we're kind of coming up. Same thing in here. We have this low we're putting in, and now we're kind of coming up. But anyway, I like to keep it on a 15-minute chart so I can see what we're currently working on. The other reason higher might be in the cards, and I can't really look at a longer-term CVD here, so don't worry about that. But we do have this liquidity curve here, which would be very tasty to come up and take. I feel like it would have been nice for 15-minute structure to just come right up off of this SFP. Okay, so 30-minute structure really shows you what I want to see. I think this is probably what I'm going to follow. Maybe it misses this point here, which might be semi-important. But really, we'd be looking at this high now anyway, so maybe this high isn't very important for overall structure or SFPs. So now we have this Model 1 accumulation. Are we going to come up and take out all of these poor highs here? It's looking likely. but very easily the opposite could happen. We did distribute up here, although it wasn't as big, you could say. That's on a market structure, higher term perspective, what I'm looking at. We do also have this 2-hour OBIM, which was kind of just blasted through. I mean, I don't know. I don't really know. I think it's gone. I think it's pretty much evaporated. I think there's a 3-hour in here, but it's so wide. It's like, do I even want to use it? And yeah, there's a 3-hour. Not really a fan. Like this 60-minute was a great example of a great order block. But this 2-hour was just not at all. So I guess I'll leave it on the chart because it's a good reference point, but it is pretty much taken. So there's nothing to use really. There's nothing to use it with anymore. Let me just make sure I'm looking at value. I also want to see the value of this whole range low. So if we came up to this point, you kind of come all the way over to here maybe, and I don't know if this is how I want to draw this. I don't know how great of a depiction of value this is. It looks really good, actually. It looks really good. We have value area low, really depicting where we're undervalued here, and then we were because we came up. And then when we correct up to these highs, was a pretty good resistance level in that 1-hour order block. So I actually really like this pull. This is the block or the range right now. Even though it looks kind of weird to pull it all the way up from here, you know, you'd probably rather pull it from here, which also gives you a pretty good depiction, guys. This is why value is so important. The problem with value, though, is it's very speculative. So it's almost as if you could put these both on your chart, which I will not do. But note that we're kind of sandwiched in between, especially here, and it looks like here as well, we were kind of sandwiched between this value area high giving resistance and this value area high giving support. Just to go back to that and show you guys. Very cool, very, very cool. Very cool, I like that a lot. So this is where you really got to figure out how you're going to interpret value. I'm going to take it like this because I think I want to look at this whole area as a range. Rather than like this is a range, this is a range, this is a range. If I want to do that, I'll go down to a lower time frame and do that. But ultimately, this is our value here. Also notice that it's very top heavy. I don't really know what that means. I couldn't really tell you. I don't really have a great idea of what that means, that it's top heavy. It's P-shaped. I'll have to check back in my notes. I'm going to set a reminder for myself in that. Markets and Profile, great book. You should read it. Tells you all about value. So let me put this in my notes here for today. P-shaped distributions. All right. Also want to note, cool thing here is that our distribution is very pointy. So if we remember, like a very bad distribution is one that kind of is flat like this. For point of controls, because there's no point of control here that's useful. If you want a nice, useful point of control, you want something like this. And then that's a really strong point of control, especially if it's naked, especially if it's in the nude. That'd be something very useful to use. So we have some cool things here. There's even this very high volume node here, which looks like we had a bounce. Let me see what it looked like over time. What the heck? You guys can see my... Oh my gosh, you haven't been able to see my chart this whole time! Alright, that's alright. Well, I wish you guys could have been seeing what I've been seeing, but I guess you're just going to have to deal with it. Value. Look, I was looking at these two value areas. This is very cool. You have the value area high here, and then you have the value area high here giving support. So we were trying to raise value from this pull, but ultimately we were trying to reject from the value area high, stay in value from this point. Anyway, so I want to practice this, or I want to check out this pull here. So even that was a really strong point of control, or a high volume node, and that would have been a pretty cool bounce from here. Maybe you could have partnered that with this SFP level, but really not anything I'd want to use. I think I'd rather use a point of control like this one. Very interested in this. Tough to say whether, you know, we could actually come up to this one. It wouldn't have to be this one. But I do like this a lot for point of control plays rather than just volume areas. But the volume areas are more useful. So now we're going to go over to our Market Monkey chart. I can't believe I've been... Sorry guys, I can't believe I've been... I can't believe I've been doing that this whole time. That was pretty lame. Well, anyway... let's check out our TPOs quickly. And we'll start with our monthly. So this is by day. So really, we did come down to the monthly value area low, tested again, just like we did yesterday. We still have this single print below us, excuse me, which should be good support, I would think, or a good target. Yeah, they've been pretty good, at least for a scalp. You can certainly blow past them a little bit before you have it bounce though, so expect like a deeper SFP, I'd say. And I'm pretty sure there was an order block in there, so I'm pretty sure I'm already looking at that level anyway. And hopefully it's not this 2-day, because this 2-day is super wide, and I don't really want to look at it. Okay, so that's our monthly. Really not too much. Maybe notice the volume ledge here is pretty interesting. I'm not exactly sure how you should use that, especially since it's not present on a weekly chart. Maybe on a lower time frame that would be cooler, but don't really see much use for it. You can see that we're really trying to find resistance on this value area low. We have not closed a candle below it. And also the previous week's value area high. So we are actually higher right now. Our value areas are higher. I can see for the rest of the week that going down to overlapping the higher, or I mean, if we do bounce up, it could maintain. So really hard to say. Not really anything super descriptive here. Let's go to our daily. Maybe we can get some good intel out of this. I put this box here. I forget why. What, can I not edit this box now? Because it's on a different chart? It's kind of lame. So yeah, trying to break below previous day value, overlapping the higher. I mean, we're looking really bullish, especially with that Model 1. We should be somehow looking for longs here. And we are back inside of value now, our daily value, so that is good. I do want to see... Oh, excuse me. I do want to see... Yeah, so I think our daily value is going to be pretty key today, which we've maintained. We've maintained pretty strong. I think you could have even really taken a trade off of that low at 722, but I was not in the zone yet, so I'm not there. Okay, so now let's look at our sessions. Just to start off, let's look at this. So right off the bat, we have So London usually puts in the high or the low of the day. Yesterday was not a great example, but I mean, we can go back a little bit. High of the day, low of the day, maybe. Maybe not, actually. This is a new principle I've been using, so take it for what it is. Low of the day, I believe. No, not really. I think this is a little shakier on crypto. Anyway, that's not what I'm good at, so. But we do have a lot of targets. I think there will be a cool short from the Asian mid, which, does not always work out perfectly. Right here, we did have this SFP at the Asian mid. Let's see what happened with previous Asian mids. This one was pretty good. This one was a range. Almost seems like the Asian mids are better when Asian mid. It almost seems like they're better when you're kind of still in the range when you hit the mid. I don't know what this is going to be like when we come up, but we'll check it out a little more. Like this one, we're still in the range when we come up and reject from it. This one, even still, we're kind of still in the range when we come up and reject from it. This one too, still in the range. So I'm not sure. Here's like a good example of kind of more what we're looking at is Asia was higher, London was lower. We came up, we front ran Asia, mid. So hard exactly to say. Usually we're still in the range when we're taking out the mid. So see, still in the range. It's almost as if Asia is very unproductive in moving price action, which makes sense. Yeah, see, this one's a pretty great example. We just close Asian session, and then we come back to the midpoint and we tap off. So I'm not super confident in that alone. I think I do want... It is cool that it is near London's high. I don't know why I'm still sore and tired. I've been up for a long time. Since 5. Anyway. I want to know what's around there. What is that? That is... $91,200. So that does line up with a couple things we have. One, the pockish of our daily pull and our range pull, which is cool. So I'm going to mark that out. I think this would be a potentially good short. Not that we have really market structure to confirm it. But let me change my screen around here real quick. So this is that 200 level right here, actually. And if you notice... Oh, great. Hold on. Got to try and find this. Okay, so if you notice, this isn't the point of control, but I kind of might as well be. We'll have to see what the reaction is here, and I'll be looking for the same thing. But I do like that we have an extra confluence level, which is Asia there. Do we... Okay, I want to get rid of this. It's a bit overwhelming. And it was our, like, kind of open point of control. Let's get rid of that. Let's see what is going on up here in this range. Yeah, that's down there too. I don't know. This is a tricky one. I don't like these bimodals. I guess I'll just mark them both out and we'll see which one sticks. We'll throw some spaghetti at the wall. But these are our 2 levels. Oh, really? I can't do text in this. POC. And this is going to be POC plus Asia mid. All right. So, makes sense. Oh boy. Now I got the hiccups. I'm dying over here. All right. Cool. Now I want to check out some sessions, and then I want to jump back over and try and plan out some trades. Do we have an open point of control? We do from Asia, which is going to be right around that. I mean, it's pretty much given us the same thing. I'd rather use the full range than Asia, so I'm not going to do that. I need to switch my screen around. I slow rolled it for you guys. Oh my gosh, it's still going. All right, anyway. So I'm just trying to look at value one more time. We have it here overlapping the lower. I'm going to call this overlapping the higher. And then we have a cool one. We have an inside. So yeah, Asia is very unproductive. I never realized how poor Asia session was, but I mean, you're pretty much just going to range. You're pretty much just going to range in whatever New York PM was doing. It seems like. All right, sometimes, I mean, that's still kind of the New York PM range. With variation. Depends on the context. We've got a little bit of an SFP going on here, but I'm not really interested. Market structure's leaving a lot to be desired today. I wonder if it's because it's Friday, and I wonder if it's because it is Friday and we're kind of wrapping up for the weekend. Honestly, I wouldn't be surprised if we just ranged in this whole area for the weekend. Let's see. Usually the market goes down when the market is open. So when the market's closed on the weekend, we could even have like a nice little steady upwards kind of thing. Hard to say. 28 minutes. So yeah, I'm looking in here. There's probably going to be something in here. It's really depends more on how it fills out for me. We also have this poor high here, which should be a, I don't know, I've never really studied poor highs. It looks like they are a, ooh, wow. It looks like they are mostly a target. I frankly, well, it looks like if we come up to it and we kind of range around it as a midpoint, it looks like it's usually a continuation pattern. But I don't really know how to, look at that. It's pretty cool. See, this was not a range. This was an SFP. It's pretty cool. I'm going to write that down too. That's something I want to study. Like, what is this? Is this really a range around the midpoint? No. This one was open. Hard to say. Probably too far away. This one didn't really range. This was formed by this, or? Okay, so that was at the end there, so. Yeah, not really anything I'm seeing. See here, it's like SFP'd barely. You really need more context in there. I don't think you can just use these poor highs and lows alone. I don't know. I don't really like them. I don't know what they signify. I gotta figure it out. I don't really see a use case yet. Nor with single prints, but I leave them on my chart because they look cool. They add some color. Okay, so let's talk about what's going to happen today. And for that, I will go back to my chart here. You know, this OBIM isn't really active anymore, but I want to kind of leave it there. It was, I don't know if you could really call this support. And yes, I know there's model 1 there and model 2 there, so we can get rid of those, kind of done. The model 2 is really important though. I think we're going to come up and try and push this high, because if we look at daily value, and while we're doing that, I also want to draw out this. We came into that 0.786. The platinum pocket, so if you've heard people say the golden pocket is between the 0.618 and the 0.66 or 0.65, the golden pocket's okay? Maybe it hits the golden pocket frequently, but the golden pocket's more like your, corner store whore. You know what I mean? Gets used often. It's maybe not very unique. It's reliable, but maybe not very good. Your platinum pocket, however, which is between your 0.786 and your 0.886, now that's the, I don't know pimp terms. Is that your bottom B? Because I don't curse. But she's the one you got to pay a lot of money for, and you'll get what it's worth. Just to use a funny analogy, it's just because the risk to reward is so much, way more rewarding. I mean, here, look. Let's just take a quick side note here. And let's say that you're really talking about this and this point as a range, okay? Let's just look at a couple different longs. Let's say you look at a long from the 618, the 786, and the 0.886. Your targets are all the same, okay? So your target is the high, and your stop loss is the low. And if you give me a second, I will just fill this out. And we'll make it look all cute and nice. Okay, so maybe you can already tell that the risk to reward is exponentially better. Here at the 0.618, you're at about a 1.65 to 1, all right? Not really anything, really never anything that I would ever trade, okay? The only time I would ever trade a 0.618 is if I can put my stop loss somewhere that's not the low, the confirmed low. Because we're talking about putting our stop under a confirmed low here, which is most of the time what you'd want to do, especially in a continuation pattern like this. So your next best thing is the 0.786. Okay, now we're at a 3.82 to 1. This is life-changing. And then we go to a 0.886. We're at a 7.36 to 1, guys. This, gets me going. This is my bread and butter here. This is why I love the platinum pocket. And if you think about it, it is really the best of both worlds. You get a really high risk to reward. You get to put your stop under a confirmed low, which is huge. That should really increase your win rate. Maybe the problem with it, oh wow, we're getting some volume. maybe the problem with it is that you, wow, we're getting some volume. Well, there goes my POC setup. It just got freaking knifed. Okay, real quick to wrap this off. Maybe the problem with like the Platinum Pocket, it's really not a problem unless you're being very strict about getting that .886 entry. First off, doesn't happen as often. Second off, you might have to consider, well, if we're going to come down all the way to this .886, does this lower the win rate on like a blind Fibonacci bounce, because you are right there on the low. I mean, you're like, what? In this scenario, we're 0.31 off from the low instead of being, 1% or 0.5%. So you are maybe risking like the possibility of an SFP or even a market structure failure. It's a little bit higher. I'd say it's a teeny tiny bit higher, but the exponential increase in your risk reward is really, it's unbeatable. Okay, so let's get rid of this. Yeah, this was a pretty big denial off of the point of control here. I want to know why. I want to know what happened with our order book. It looked like both, what is it, 831? $830 on a Friday. $830? What the frick happens at 8:30? I'm just doing a little check, guys. This is peculiar. What the frick? Yeah, I don't know if this is like a reoccurring thing, but it did kind of happen right at 8:30, which is usually significant. Maybe it's just volume coming in. I mean, it's an hour before market open. Huge volume spike. I want to see what's going on with... So, yeah, I mean, spot bought a little bit. Which doesn't really make sense because that's typically the inverse of... well, there's this one strategy, and the reason I talk about this is because it's very cool, and it's probably a good way to think about when the market is open and when the market is closed, which is there's a company that just every market open, they sell all their positions, and then every market closed, they buy Bitcoin. so they're only holding Bitcoin when the market is closed. And that's because when the market is open, there's just effery. So their whole index is based around only holding Bitcoin when the market's closed. And I think they made like a huge, I forget what the return over the time frame was, but all right, so this is not right. Let's just do our market structure here. This is like this. And then we just SFP'd that. So really our target now is this bottom again. Super weird. I don't know what... Spot maintaining their slightly higher buying position. Here I'll... Spot over here maintaining their slightly higher buying position even though at a lower price, and they've been buying pretty steadily. Pretty much since this low. The last time we were at this CVD area was... yeah, so not much to be said about that, really. Maybe we look at CVD over time here. We just zoom in on this a little bit. I like this one. Yeah, so well, perpetuals don't look very good. Let me put that first and foremost. Any of the buys that happened in here are eviscerated. They're all gone, and that happened early this morning. So I mean, they're getting rid of their positions for the weekend. I don't necessarily think that means price is going to go down, but maybe there's less residual longs. SPY is picking it up. If we look at this low, SPY is picking it up. Let me look at other places that we've been at this. Spot CBD here. Here. Yeah, we're pretty much neutral here. I'd say we're pretty much in a neutral scenario right now, which to me means ranging. However, we do have a ton of spot buying recently since this morning, so probably come back to the top of the range and then we kind of just range all weekend is kind of the approach I'm thinking of. All right. Maybe we can check out some book maps, see if anything's going on there. I don't really see anything too cool. We can zoom in on what's going on. Let's see what Bookmap CVD says. Uses slightly different exchanges, so it's a little different. How do I get rid of this? Okay. Let's see. Not really anything you can't just see on Market Monkey. I'm trying to compare the two right now. Sorry, I don't have two monitors set up for this. Man, it takes so long to freaking scroll out. I don't like it. On all these platforms, I need like a speed scroller. So yeah, this was a really cool Model 1 at the top here. I mean, a slightly higher SFP here, not a super bad reaction. But then what the fudge? Hate that. But then a residual limit order at the top here, which was filled, and a slightly higher SFP. That would have been a pretty phenomenal trade. Even when, do these guys have a brush? Well, that's really lame. That is really lame. I guess I'll draw it with my finger here, especially since if you look at market structure, we have a low, high, higher low, higher high, lower low, market structure break, Model 1, limit orders filled. We come back up for a RIMC. Guess what? You can bet yourself that was a platinum pocket retracement. Might have even been a 0.886, which is crazy risk to reward. 7.76R, if I remember correctly, just down to this low. And then you got all this gravy down here. Could you do it? What was this at? I don't actually even know if this is in UTC or UTC -5. And I don't even really know how to check that or... Let me see. Time zone. New York, okay. So this was at 8:30 at night. So was I around? Definitely not. Is this resetting to 0? I hate that. I just want a continuous CVD. I don't actually care what. I don't actually care what. I really don't actually care what. I just want. I just want. I don't care what level it's at. I just want to be able to compare it. Yeah, see, that's kind of cool and all, but huh? Maybe that is cool. Huh? All right. Well, maybe I like that. Maybe I like that. I don't know how granular it gets. Let's see. This could be pretty cool. I don't know. I don't know if I like it. I don't know. I don't know. I just hate that it resets. I wish I could change that. I don't know why I can't. Anyway, let me try one more time. Man. Well, that's really lame. Uh, oh, did I do it? Oh, did I do it? Oh, okay. Nice. Very, very nice. Oh boy, this is hard to look at this computer way up here. The problems of a first worlder. Let's see what my stats are. Nice. Recording inactive. I better be recording. Okay, yes, I understand. All right, back to what I was doing. So, yes, CVD, let's check it out. CVD is gross right now, guys. You'd hope this is much higher. I mean, I guess it's somewhat of like a divergence because price is rising as volume is not necessarily backing that up. So it's almost like a hidden divergence. It's like if price made a higher low, but momentum made a lower low. I guess the reason I'm actually really surprised Bookmap is so bearish with CVD because actually the CVD on Market Monkey is looking pretty good, especially spot, and that's what you want to see. You want to see some nice spots, nice spot buying. I have to say though, I really don't have much of a. I really don't have many trades planned today, only because you just don't really have great market structure. I mean, you're in a range now. Yesterday we had some pretty good market structure. We had this break or this continuation. And then we had a range here with a liquidity curve and then an SFP. And then we had this break right here. And then we went up. Then we had deep retracement and like a random bounce. I really don't know why we bounced here. Model 2, Model 2, Model 1. It's just all over the place. SFP inside of an SFP inside of an SFP. There's just a lot going on yesterday. I didn't even really realize. And then, you know, this Model 1, I think I said that already. But today it's kind of just like, what's our market structure now? Our market structure from the top is this. Okay, so now we continue down because this is an SFP. It's like I don't really care to trade this SFP. We're right in the middle of the range. We're not even we're not in a discount or premium. We're just in the middle of nowhere. So not really a fan. This might be one of those days where you just don't really get anything you're looking for. I mean, I guess we are, I think because I'm talking, I'm like low on oxygen. My brain's trying to get me to yawn so I can get some oxygen. But I guess there's something to be said for the POC being way up here, and you got a lot of empty space in between. Doesn't mean anything to me. I don't know what that's supposed to mean. So this is just kind of places I don't like. You know, at least here, it's like you could have tried a short from here off of this SFP or in this 30-minute order block. Could have tried a short from up here for this 1 hour order block. Long from in here. Model 2. Model 2. SFP. I don't know. It's just kind of not really anything I want to see. This is a structure I see a lot at the time, which I guess is like a diamond. But I've never used diamonds, so I'm not really... I wonder if they have them in the... I'd imagine it's also something like a harmonic. I don't really know how to use a harmonic. I don't know how to do this. Maybe I should learn that. It's a cool one. I don't think you really need to. I'm not really a big pattern guy. I mean, I think Wyckoff models are important because that shows you accumulation distribution, which is a very important principle in trading, seeing where the money is, seeing what the big money is doing. But even something like a trend line, I just don't really see much use for it. It's like, okay, well, this trend broke, but I more so care if the market structure is broke. So I don't really know why. I don't really understand why you'd use a trend line. Just doesn't seem like... the reason why I don't really like trend lines or channels or etc. is because it doesn't really tell you anything about a point of invalidation. It's like, okay, if we break this trend line, where does my stop have to go? Just above the high? But if it broke the trend line, does that mean that we had a structure change? Well, no. Okay, so then why would I place my stop up there compared to anywhere else? When you have a market structure break, you have a confirmed level that you can put your stop under. It's only really like SFPs are the only thing I'm trading which has an unprotected level you have to put your stop under. Maybe even if you take a trade like this, okay, and this is pretty cool. Actually, there's a better example yesterday. Let me remind myself where it was. It was at this low. Let me turn this off. This was pretty interesting, actually. So Actually, no, it might have been the daily. Yes, it was. So we came down here and we had this structure. We had this SFP, which again was an SFP of an SFP of, I can't even scroll back enough, in SFP. So you have to think that if we really do hold this level, the gravy train could go on for a pretty long time. The gravy train could actually be pretty beneficial. Oh, I'm still on book maps. Well, there you go. Now you can see it. I wish I just had something that did it for me. I don't want to... It's like wherever my cursor is, just follow my cursor around. Maybe I could do that. I don't know. Yeah, honestly, like negligible volume causing that whole little run up and down we just had. Looks big on book maps, but it's like really compared to this previous low. Here, let me show you. Compared to this low and this little whatever this was, it's like actually not that much going on, especially volume delta wise. But anyway, so I want to get back to why value could be a really cool invalidation, or you can use it as an invalidation different from like a trend line. I mean, you can do it with a trend line, I guess. Like you can actually take this and like break up here and put your stop down here, I guess. But what I would rather do is, including this giant SFP thing going on here, what I want to know is when we get re-acceptance back into value, especially after this potentially large gravy train, and I think you would have had to draw your all right, buddy, calm down. You would have had to draw your value area different here. Like it would have had to be that. And then you would have used this level. But anyway, so let me turn this off then. So we have this giant move. We break back, which causes a break back up into value. Now what we need to be looking for is staying in value. So if we just had, which also came with a market structure change, right? This was like this, market structure change. Now, if you wanted to enter on a retracement, well, where's that retracement going to be? We just tried to break below a pretty strong value area level, value area low. And we just got a very volatile reaction with some good volume. Now what I'd be looking for is I'd be looking for this value area low to hold. I don't want to break back under value. I don't want to search again if we can move value lower, because we just did that. We just tested volume and we just got re-acceptance into the range. If we have to test volume again, maybe that's where you're using a completely different entry model, like a Model 2 here or a Model 1. But I don't want to lose value, so that's when you could say, okay, well, get me in at the value area low, right? And just put my stop kind of down here. I don't want to really SFP. If I break this value area low, I'm closing my trade. That's it. Which, by the way, to the high of the range, which I guess is up here, really sustains your risk to reward. 6.2 to 1, 0.17 stop. So that's one way to do it. But that's what I mean. This is a point of invalidation, okay? My stop wants to be a point of invalidation. I want to, if I get stopped out, it's like, okay, good, because there's probably more pain to come. It's actually good to get a stop out because that means you're saving yourself excess losses. So, and you know, if you use a trend line here, it's like, let's say that's your trend line. I guess it's the same thing. I guess it's like, you know, well, now we find support on the trend line and you don't want to break the trend line and here's your target, you know. I don't know. I don't like it. I don't like trend lines. You can do it. You can do it. That's all you, man. So anyway, I guess we'll just come back to this stupid price action, where we will see what's going on here. So looks like we're trying to bring value up. Interesting that we kind of wicked right before this point of control level, because that kind of does, except for maybe an SFP, that kind of does take out that level. So now we're really only looking at this one, which is pretty cool. But that's kind of really an unproductive day. I guess I'll do some programming. I mean, it's also not even pre-market yet, so, well, I guess it's pre-market, but it's not even market open yet. This is what's so great about waking up early. I've already been up for 4 hours nearly. I read this morning for an hour. I've been reading Atomic Habits. Great book. I said to myself, you know, if I was a smart guy, I ought to read this book a couple times. I ought to read it through. It's only like 6 hours to read it. Maybe I'm a slower reader. But I said to myself, I should read it through, then I should read it through again and highlight stuff, and then I should read it through a third time and take notes on it. And that's what I would do if I was really a baller. Ooh, we do have a 60-minute order block in here. Right here. That's something to look for. I don't really like 3 hour. I don't like that time frame. I don't really ever use that. Maybe I should. What the hell is this so bright for, huh? My eyes are burning. You also have this 60-minute breaker block, which is cool. Because we just kind of, we had it as support for a bit, but then we just smashed through it. And now this level is a breaker. So this would be a support to resistance flip. Or more reasonably, a demand to supply flip. So it's cool. I guess it is. I guess I kind of want to see what the reaction was. 60 minute. Yeah, broke it. It's kind of spent. It's not the same super obvious break that you'd want to see. I don't know. I'm not super skilled in breaker blocks either. I don't really care for that 3 hour. I wish I did, but I don't. It's really just these 2 1 hours above me, above us. And if I had to guess, it's just going to be a range. Maybe we make a run up for the high of the range, make a new high. Let's see. Really it. Nothing very obvious. Nothing really tasty. I don't like this little scam area. It's like, oh, you're short? F you. Oh, you're long? F you. It's like, oh, you thought you could hold a position for more than a couple of minutes? F you, man. But we do have this kind of like this thing going on. Wonder where this is going to break. But I'm going to pretty much hop off. So much talking. I think my nose is clogged and I'm just not getting enough oxygen in my brain. Oh, are we breaking out of it? I wonder what CVD is doing. CVD looks like we're going to break down. I want to know what it looks like. CVD is very bearish. Let's look at book maps for a second here. So this is our little triangle area. And CVD is very bearish. Does that mean that we could... Let me look at Market Monkey too. Market Monkey is pretty much even, actually. I'm a lot of perpetual selling. But spot is semi-sustained, so actually that's kind of contradictory for me. That would lead me to believe that this down move is actually really maintained by perpetual selling, but spot's keeping it up. So I mean, when we do have that extension rather than the pullback, if market structure is going that direction, that it would be a bit more bullish. I mean, you could also look at passive positions here. Wow, look at the books, guys. This is really interesting. So remember how I said, like, oh wow, it's 8:30. Isn't that such a strange time? Look at how thick the books are. And then right around 8:13 or right around 8:23, like 8:25, the books just thin out, and all of a sudden there's nobody. It's like guys, the 8:30 Friday, stop out's gonna happen. Everybody clear the books. Get out real quick. So it's like all the liquidity disappeared. Everybody stopped, doing high frequency trading, and then the books were just all of a sudden empty. They ran. I wonder if that's a daily thing. I wonder if the books, well, because usually I notice the algorithms do have like a different scalping strategy between when the market's open and when it closes. And you can tell, like when the market closes, when 4 o'clock hits, there's maybe 5 or 10 minutes of like no volume, no orders, no nothing. And then it's like they flip that switch off and then they turn the other one on. And 10 minutes later, it's like the volume kind of comes back, but it's less and it's different. And it's they're running a different bot. That's kind of as easy as it, or as complicated as it has to be. But super interesting that you have these. I want to look at what passive orders are doing here. It seems like these passive orders were really kind of taking both sides, both positions. I see a little bit more red here. It looks like, look at how much sense this makes, okay? It actually looks like predominantly that maker and limit orders were filling short. I mean, you see a bit more limit asks, right? You see a bit more lines here than you do longs. Maybe you've got 1, 2, but over here you've got 1, 2, 3, 4, 5. And look at the volume in this time. Maybe I can like squish it together so it's a little more obvious. Maybe I can get rid of, maybe I can change to delta. Notice in the run-up, we actually have a lot more selling pressure Then we do buying pressure. What does gradient do? Ew, I don't like that. I don't like those colors. Should I turn on smart cluttering? Anyway, so that's pretty interesting. It actually looks like we have majority selling in this zone, which is very cool because which way do we run first and which way did we run further? We ran in the long direction, stopping all those shorts out first, and then all those people that went long now, right? You see the delta here, and we go and we take them out too. So it's like a book wipe. And look at what happens right after we do that. You see the order book like quickly disappear here and then slowly, kind of apprehensively start back up. Very cool. Very cool. Very cool. I'm interested to see. It looks like we're filling a lot more passive longs here. It looks like we've got some pretty big orders. Passive long. So let's count it out. +1, +2, +1. This is really hard. Let me zoom in a little bit. 1, 1, 0, -1, -2, -3, -4, -5, -6, -7, -6, -5, -4, -3, -2. So kind of not really any different passively. Slightly to the downside, slight more selling. But that's by levels, not necessarily by volume. So, take that for what it is. Also, CVD, poor. I want to shift over to Market Monkey real quick. I want to look at the volume there. We're starting to see some spot selling, which is not necessarily what you want to see. But, I mean, still overall very pretty straight up from this bottom. Perpetuals really, like you can see once they stop participating right here, it's like, did this spot really even matter? Because the spots, you assume, are a longer term market participant. So perpetuals, using leverage, you're paying extra fees for borrowing money. You're usually a quicker in and out sort of trader. With spot, you aren't taking as large of a position size. You're trying to hold for a longer period of time. Maybe this is more of like a swing compared to a scalp. So you'd assume that spot is a longer term participant buyer, which means that they are willing to hold their positions longer. They're more of like invisible support either way. They don't really actively move the market, but if they're not there, the market's only going to move perpetuals, which is just very volatile. But with this kind of spot underpinning, I would be looking for support somewhere in here. I just wish we had like some sort of market structure thing going on here. Wish there was something to use. I mean, maybe we can invent it, but it really goes against my system rules here, so we'll try. Maybe there's something over there. I don't know. I don't really like how the okay, we're starting to see maybe a little buying on Bookmap here. Let's cut to let's zoom in here. So let's say that we were looking for even that is a break, and then this is a break. So maybe you'd be looking for this in that platinum pocket. And CVD is starting to come in. It's starting to come in on Bookmap. What do we got for very, very tiny OVIMs? We got a 5 minute in there. That's good. I don't know why I'm so congested. Hold on a second, guys. How do I pause myself? Whoa, that just glitched it. That just glitched it. Man. Ugh. It's that time of the year. Stuffy. So anyway, what were we looking at? Maybe like this 5 minute. It's not really anything I'm interested in. Just because we're talking internal market structure now, we're not even really. We're using imaginary numbers, right? We're doing math with imaginary numbers. We need real numbers. Imaginary numbers are actually really cool. Cool way to describe reality. However, we'd have a hidden bull, a div right here. It'd look better on something like a no, don't really have any time frame. Maybe a 2 minute. I mean, this might happen, but it's just the more I talk about it, the more likely I am to talk myself into it. It happens all the time. You just like see one good candle and you're like, oh, I might. So, I mean, there's your setup. But we like real money, not fake money. We like real market structure, not imaginary market structure. I would be interested to see what this has to say. I wish this was real market structure because I probably would be taking this. I bet there's a value area low in this area that would have been very juicy. Yep. Very juicy, right at that 0.886 too. But I'm not going to look at it because I don't need that. There's a lot of buying on Bookmap. Let's check out Bookmap together, shall we? Let's go up here. Bookmap is actually really like, people are getting into some positions. I wonder if these are being filled. It's really hard to tell on crypto. I feel like a lot of the time they are actually being filled, but it doesn't look like it. So, yeah, it's like, was this filled or... It's like, is this, you know, you go from 45 to 24, and on this one you go from 45 to 5. Is that because it's getting filled, or is that because it's getting pulled? Not really sure. Well, the CVD on Bookmap took a bit of a bounce. Let's check this out. I just wish Bookmap was a little faster. I mean, it's pretty good. Don't get me wrong. Wow, yeah. So, huh. Well, maybe we ought to play with imaginary numbers, kids. I'm wondering if there's anybody chasing this. It looks like it. It looks like they're trying to... Look at that buy order, too. What was that? 63? I want to see if I can see this on the good old monkey. Kinda. I don't like using these, I only use these. That was weird. The music sounded weird for a second. I was like, is God summoning me? This is very ethereal. Ugh. Well, you could be risk-free from it right now. That's for sure. I don't really see anything going on Bookmaps that would lead me to believe, or on Market Monkey, I mean, that would really act as a confirmation. Spot is the one buying this, not Perpetuals. Perpetuals is pretty much dead in the water. Interesting. Let's go back to Bookmap because this is something cool to look at. Now this one had to have been filled, right? I don't understand how this could not be filled. All right. This one had to have been filled, right? This was your level. This was your level. Pretty cool that this is the low. 62. I wish I saw this in real time. I wish you could go do bar replay because I wish I could see the depth of market at this time. And right as you hit that level, what do you see, guys? Major CVD divergence. I wish I could kind of see volume better here. See, it's like mostly sell, and then it kind of shifts over. You see like the selling kind of staying the same or going down, but then on top of that you see the buying kind of going up, and then you just reach a breaking point where you get that market structure change. I'm interested to know when you get this market structure, more like microstructure. So you got this break at 92.90. 92.90. Let's see what this would have been. Let's so 92.90 is where you had that market structure break. That would have been right here, which makes sense. If you guys didn't know, you could very easily just like kind of guess market structure. If you have, you just got to use the candlesticks like market structure. So I actually have a really good example for this if I go to a different chart. Hold on a minute. You guys want to see something really cool, huh? Okay. It's a stupid thing I had to code. Check this out. You want to see something that might blow your socks off, I'm hoping? Market structure candlesticks. So if you don't know anything about me, what am I going on? An hour and 25 minutes. If you don't know anything about me, I am a coder at heart. That's how I got into, well, it's not really how I got into trading, but I was so interested in indicators that, well, I learned how to program. So I don't know why this isn't working. Might not work. Might be broken. I'm not actually sure. Market structure candlesticks. Oh, I need to turn that on. And yeah. Sissy Strut by the who is it? The Meters. Good song. Check it out. Alright, this might not work on a 30-minute chart. I don't know why it wouldn't, but maybe we can check it out on a daily. Yeah, here we go. So, this is daily market structure in candlesticks, guys. So, very cool thing we got going here. This is our current box. This is from inception. This is our previous high. Every box is a distinct market structure point. So if you have the green arrows, that's because it's upwards market structure. If you have the red arrows, that's because it's downwards market structure. The direction of the arrows is whether it's a pullback or an extension. So extension, pullback, extension, pullback, extension, pullback, extension, market structure break, pullback, extension, etc. So anyway, pretty cool. And then this most recent candle that we're printing is a very long range. So we are in a ranging situation. But it's pretty cool to see market structure condensed like this. I'm actually really surprised that this won't work on a 1 minute. Let's go back real quick. Oh, thank gosh, I'm sharing my screen. What the heck is this? What the heck is that? What is that? Okay. So, yeah, it would have been a pretty good trade so far. Would have been like a 2.33 to the top, which is not really enough for me. I want to see us back at least at this value area high. Here we go. So here's our current 1 minute market structure. This is pretty cool. I wish I could compare this, but I cannot. Well, I kind of can. This is a lot more data than you think. This is like nearly a 30-minute chart. It's hard to tell, but this is the whole range that we were just in. This is the run up. This is the run down. This is that tiny little thing. And then this is, I don't know, let's just compare it. Let's go to a 1 minute chart. I don't even think I'll be able to zoom out enough. And let's get rid of that because I don't use that. So if we just look at this, what we're looking at on 1 minute, on those 1 minute candlesticks, is all the way down here, this range, and then all the way on its way up to the top here, and then it's way down, and then this last bounce, I think, is the last thing that's there. Yep, so maybe let's compare it to a 30-minute chart. I'm making sure I'm still looking. So pretty much if this is a 30-minute chart, this is what you're looking at. And that is market structure, baby. You can kind of really line it up well. Kinda. It's hard to tell, but So, in other words, the conclusion of this is that market structure, or it's hard to say which one's which, but they are both equivalent. They're both showing you the same thing. It's like candlesticks are very important. And you know what? Me talking about this actually makes me want to go more in depth of candlesticks, because the two kind of philosophies have so much overlay. If you studied candlesticks, you'd really learn a lot about market structure and vice versa. So it's pretty cool. Very, very cool. But candlesticks are really just market structure on a lower time frame, plus a little bit of noise. But if you use especially the market structure points, I forget exactly what the candle bodies and the candle wicks are in this scenario. I don't know, because it should be that all of these candle tops and bottoms are connected. Like it should be like one of these charts, a Renko chart, but not actually Renko's. And you can see how it's messing with it. So it should be kind of like a Renko, where every bottom is connected to another top. I mean, same with candlesticks, but a little more. Maybe I'm thinking of a high-low chart. I don't think so. I don't think so. But anyway, market structure rules. Market structure rules. That's all I have to say. My music stopped, which is ultra lame. Let's listen to something funky. I'm kind of just talking to talk. I like talking because every so often you talk about something that's really cool, like market structure and candlesticks working together. I'm actually going to put that in my notes. I got to study that. That's weird. My phone knows that I'm going to put market structure after candlesticks. Might have put it in my phone before when I was coding it, but... All right, this is a really weird bounce here. I don't trust this at all. I do not trust this at all. I mean, I guess it's got good fill. Like the wicks are good, but I don't know. I don't like when it's just in one direction continuously, you know? I'd rather have something like this where we kind of putt around and then bounce it high. Because this is like a giant... Okay, yeah, there we go. Maybe it's just that on a 30-second chart. But we are hitting that value area high here. I want to check out... So, if we look at our bubbles here on Market Monkey, we've got some pretty good volume. Let me pull that up. So, we've got some pretty good bubbles in here. It's not really like a significant amount of volume by any means. Because what I call significant is... It's a little hard to say because I don't have like a coefficient in front of my bubbles. This is my own code. Because I don't like coefficients. I'd rather just adjust it myself. But anyway, I mean, this was really some juicy volume. So where we're at now is kind of like medium to that. You know what I mean? It's more equal to something like this or these. Or these, I mean. But, I mean, this is probably TP1. This is where maybe I drop 30 to 50% of this trade. And let me go back to let me go back to TradingView real quick, and then we'll look at Bookmap. So if value area high is like a reasonable place to drop a good amount of the trade, especially if you're starting to wick it and you don't just blast through it. For what are we talking about here? For a 3.26, so that's pretty good. But I mean, ultimately, you're still looking for that 8er at the top. So let's say you sell half now, you're at a 1.5R profit, and then you sell the other half at the top of this range. That would be 4, so you'd get like a 5.5R total. I'd really rather not sell the position. I'd rather just move my stop, but there's not really anywhere to move my stop to now because it's like, do I really want to, wow, what is it, 9:30? It's 9:30. Look at that. We're getting some volume. It's like, do I really want to move my stop to break even? Is that like a fundamental market structure point? Maybe to prevent, I mean, it would definitely prevent losses, but I don't know. I'd rather just, I flip-flop between moving my stop and take profits. Wow, well, this one would have just, your profits would have just been eviscerated. And this is why value areas are high, guys. This is value. This is the beauty of value. We bounced off the value area low. I don't know what the end of this is going to look like, but it seems like downwards. But we had a lot of spot CVD buying, so I'm a little more confident in this than I think maybe I should be. But 9:30 is just going to bring who knows what. It's not even really logical. The book is really moving quickly, dude. We'll look at the book while I finish talking about that other thing. This book is awesome. I love Bookmap. Bookmap has a place in my heart. So, if you have speed vision, let me finish about what I was talking about before. So, really great setup, imaginary market structure, imaginary internal, stuff we're using here. But we find support. This is the importance of values, what I'm saying here. We find support on that value area low, which aligned with our market structure. We assumed, because of market structure, this is the assumption, we assumed that price would find support on this value area low for a number of reasons. Because we're in bullish market structure, because there's a 5-minute order block with imbalance, okay? And because it's the value area low, I guess. We assumed that people would find that undervalued. We assumed that the value area low would act as support and a good entry to a trade. Because our stop loss is under a confirmed market structure point, which is great. See, it's like, that's why you take profits at value area. We can also put our stop below a confirmed market structure point because this high was broken, so this is now confirmed. Whereas this, our current point, is unconfirmed. I mean, we could make a slightly lower low and still be bullish. We could even SFP this low and still be bullish. Or we could break it, as usual. That's always a possibility. But people thought that the value area low was a point where price was undervalued. And we assumed that. We kept our risk to reward in mind. We assumed that people would find that undervalued. And yeah, we had a pretty good run up. That would have been a stop out there. And we're getting some pretty cool reactions now. That was a great trade example. That was a good one. So, we took that trade based on good risk to reward principles, based on price being undervalued. And we ran it up to the value area high. The value area high, we tried to break outside of the value area high and raise value. The price was trying to dictate, and this is really, we're talking about the composite man. The composite man was trying to see if price was valued greater than the value area high. But sellers came in at 9:30. Perfect timing, by the way. Very coordinated, because it's not actually coordinated. It's just a bunch of people working in tandem. We tried to push higher above the value area low. We tried to shift value higher. People thought that Bitcoin might be worth more, but it wasn't. We got rejected at the value area high. So now we'd assume a rotation down to the opposite side of value, the value area low, which is exactly what we got, and then some. So very, very cool thing to talk about. And if you notice here, this line is flashing between green and red, and that's because this is a swing failure pattern if we don't have a candle close below this level. So technically we're still in a bullish market structure right now, even though we made a lower low. So if we can hold value here, this is not something that I have a system for, nor I think would I take at 936, because I think we're still going to have a lot of volatility. But you have this SFP. I'm sure that there was some sort of divergence. Let's see. Yep, I mean, you kind of have like a 5-minute divergence. This is kind of same. Wow, I'm seeing a lot of patterns over and over again nowadays, guys. This is like exactly like the macro structure we had previously, where you have like an SFP off of an SFP. And it's like you have a divergence here and a divergence overall. So that's pretty cool. Shit, you're still on Bookmap. Oops, my bad. I'm sorry. Didn't mean to do that. But you have this possible divergence. It'll close on a 5-minute, visible on a 3-minute, 1 minute. It's a bit too far away to use, but maybe what you'd want to do is say, well, now that we have a SFP and a divergence, and I think this is a bit more useful when you have like a way higher time frame SFP, because that's that gravy train. When you have a really higher time frame SFP, you know, maybe you can bear like what would you have to do here? You would have had to bear a 0.3 stop loss, and I mean your overall target is only like a 2.5 to 1. So maybe that's only bearable if this SFP was like a bigger one and you're targeting way higher, maybe a range expansion towards the highs. Which, by the way, everything I just described there happened yesterday at 9:30. At 9:30 again. The difference was that it actually had a more significant SFP level, which was a 30-minute. But I mean, we had an SFP. This one was actually more like a triple play than a double play. We had an SFP of an SFP of an SFP. So pretty cool there. Same kind of thing here. Same kind of thing here. We had an SFP of an SFP. So it's almost like the second 9:30 comes around and you just got to drop down to a lower time frame. Because it's like, does this candlestick motion, and I'm gonna get this out of here. Is this candlestick motion really defined well on a 1-minute chart? Maybe up until then it was, but now it's kind of not. Now it's like you might want to look at a 40-second, which maybe more accurately defines. I mean, you have some tomfoolery going on here. Maybe a 30-second defines market structure a bit better. I'd say, yeah, I'd probably want to be on a 30-second. And my reasoning behind that is very simple. Very, very simple. You just want to look at the space and size of the wave. So what is our distance between highs? Are they somewhat equal? And it actually looks like you have somewhat of a pattern here where you have like a long, short, long, short, long. But are they of equal length? And then you can also see are they of equal height? I think the more important thing is it's just general spacing. You can eyeball it. It's not something you need to put in perfect words or like programmatical words. But I mean, look at what we're doing now, guys. Can you guess what just happened? Same thing I just described. Oops, what am I doing? And this is why value is so important. Let me play around with this poll a little bit too. I hate how, I don't know what TradingView does with row sizing on a 30-second chart or a less than a minute chart, but I really dislike it. Very, very much dislike it. It's like unusable. It's like you can't even use a fixed range on a lower time frame chart because it's using tick data or something. I don't know. I'd rather just literally use the candlesticks on the chart. But that's way too complicated to just add that button in there. Yeah, so maybe we look at our range like this. And watch, look, if I go to a 45-second chart, what the frick is that? Because it's using ticks or something, or like a seconds chart, I don't know. But anyway, so what happened? This is pretty classic New York Open, and I usually don't trade New York Open for this very reason. And interesting enough, a very similar thing happened at 8:30. You know, we had this kind of diamond thing going on, and it seems like we're doing the same thing here. So I wouldn't be surprised if we just kind of filled this out the same way. I never use diamonds or whatever they're called, but it seems like today is a diamond day. But we didn't think the value of Bitcoin was lower. We didn't think the value of Bitcoin was higher. We tried to lower value of Bitcoin, but people wanted to buy it. We tried to raise the value of Bitcoin, but people sold it. And that's kind of it. That's thinking in terms of value. It's very quick to have to look at it on a 1-minute chart. I mean, you really want to look at it on this structure. Maybe even on a 5-second. And see, this is where market structure is useless, okay? 5-second market structure at the moment, because it can change. It can be good and then it can be poor. Look at your distances here. You have a huge wave, and then you have a super tiny wave. And then you have this looks pretty good. And maybe this is where it's good, but then you have a super wide one and a super wide one. It's just not very reliable. You can't really use it to make assumptions is the problem. I want to be able to make small assumptions that build together into a colorful picture. But if my market structure is just going to not very descriptive, then I can't really assume anything. And I guess that is the goal of market structure. So I'm wondering here, maybe, I mean, look, ready? This is your long to fill out the diamond. This would be another one of those platinum pocket longs, I believe. Oh, well, we're stopped out. All right, so it's not a diamond. Maybe an SFP, or we break lower. And if we break lower, so right now, what's happening? This is the value area is what people think is fair value for Bitcoin right now. People think that on a 1 minute chart right here that the fair value of Bitcoin is between the value area high and the value area low. Briefly, the composite man thought that value might be higher. And maybe on a very low time frame it was. Maybe value was higher than this value area, this fair value area. But it wasn't. We came back down into value, and we pretty much barcoded around there. And now the composite man thinks that Bitcoin is actually worth less. He thinks the value is lower. He thinks it's overvalued. So we're coming and testing and seeing that if we'll get acceptance outside of this range. Which means, or which requires interest of equal parties, or maybe lopsided interest at that new level. This didn't go any higher because people didn't want to buy up here. People weren't interested. People didn't think that this was fair value. If this comes back up into the value area, people didn't think that it was worth this. They didn't think that there were no sellers here to continue to push price down. Or maybe there were more buyers, right? It could either be lopsided or an absence. 6-7. It makes me giggle. I know it's so ridiculous, but it's so frequent. I don't know what it is about those two numbers. It's almost like if you're kind of trying to predict something, predict the value of something, or rate something on a scale of 0 to 10, 1 to 10. It's like you want to be a little bit more than 5, but not too much. And maybe that's kind of just built into our brain. I swear, people around me say it so often, completely unintentionally. Like boomers that don't even get the thing. I think it's just like one of those reoccurring brain things. But I'm really excited to see what happens here. Not that I really care because I don't have a position, because I think this area is kind of dumb to be trading in. I mean, look at a 15-minute chart or a 30-minute chart here, right? It's like, are you buying when it's cheap? No. Are you selling when it's expensive? No. Are you hoping with a good risk to reward standpoint that you're getting in at a good price and there's opportunity to go higher? No. So, what are you trading right now? You might be trading value, right? You might be scalping a range. But I don't really see anything of super big use here. Another thing I just noticed, and this is actually pretty cool, is that you do have like a power of 3 in here. You have this range. Then you have like kind of like this trying to break out, but then gets reaccepted back into value. And then, I mean, your best target here would be back at the bottom of this range, but we get a little bit more than that. So that's actually something I should have been looking for. I'm not a big power of 3 guy. I got to build the habit. It's my muscle memory and power of 3s is pretty weak. Very weak. But if we look at order blocks, then I want to maybe look at Bookmap and see what's going on. 3 minute, 5 minute. I'm really not interested in any of this stuff. Frankly, I'm surprised we're even at this level because I thought that this Model 2 would be a little more powerful, but I think because it's Friday and we're expecting like a lazy weekend as usual, there's just not really much confidence. So, which, you know, it makes sense. It does. It makes sense. But, sorry. Just not much confidence, not much reason. I guess I'd be looking at this SFP. All right, I'm getting distracted here. Okay. So potential SFP there. Let's check this out on the monkey. Hold on a second. I gotta reload this. It's a glitch. It's a glitch. All right. By the way, this is not a gun. I just realized this is in the back of my camera. This is an air pistol. I wouldn't just leave like or a pellet gun. I wouldn't just leave like a real gun on my countertop, just so you know. It's like I have a gun. I just don't leave it on the table like that. I just noticed that that's been in my background. I'm looking, I'm like, what is in my background that's so cool? Let's check it out. I got a calculator. I got a Masonic picture frame in the back of my thing. That's hilarious. That's very funny. I'm sure sometime in my future when I'm a politician, that will come up. That's very funny. My great-grandfather was a high-ranking Freemason. I'm not a Freemason. I don't even really know what they do. Okay, so I was a bit of an esoteric kind of guy a while ago, but I've since left that behind for the Lord and Savior Jesus Christ, and you should too. Something about talking makes my nose itchy. What does this do? Can you guys see this right now? Anyway, all right. What are we doing? Monkey? All right, let's check the monkey out. And we're already there. CVD, you can really see the perpetual contract buying coming in here. I'm kind of surprised that we are here because our spot buying is just so good. Maybe this is the one time I'll use a trend line here. Maybe we're getting lazy with it, but you know, whatever, something like that. I'm not going to be like a nitpicker with that one. Perpetual though, perpetual is just like abysmal. Is that a word? Dismal? I've been saying dismal for the last couple days a lot. Let's look that up real quick, shall we? Very profound, limitless, very bad. Okay, good. I wouldn't really use that word like that, but I'd use it as the first two. But I don't know. I want to look for a long. I just don't really know where or how to get it. Maybe you could do something like this. I mean, you know, because the CVD is good. We're getting that kind of breakout again. We're trying. Let's go back to trading view real quick. Okay. So, I mean, I guess you could do something like this. Again, it's just like really not my system. It's really not. This is not a bug in my code. It's working as intended. The problem is that the intention is This is the first time I've ever seen this error, but it's because we took this low with a wick, so it still thought we were in upwards market structure. It wasn't looking for a lower high. And then we did actually break the low with a candlestick close here, and then it looked for this low using, or this high using this low. So that's very annoying. But I guess the result is mostly the same. We had a break up and we're still bullish, so I mean, well, we didn't because that was an SFP, so we're bearish. Maybe you could use this. So what, you're looking for that? Not my system. Shouldn't even be talking about it. I should be talking about value. Let's talk about value. Let's look at the, I keep wanting to go back to Bookmap, but I am drawn to this right now. I don't know why. I want to look at the daily value over time. I think it'll be an interesting picture because we are very much under value. Oh, well, actually, we're in value. So here is over time. The value area, again, are what people believe is fair value for the day. So today, we thought that this white line was undervalued and this white line was overvalued. And the point of control is the fair value based on volume. I like TPO charts a little bit more, but I haven't been able to get around to reworking this yet. So we're actually really trying to investigate how low we can push value. Before I was talking about how we were trying to push value, but we were failing. Well, now we're actually lowering value. When we compare the previous value area yesterday to today now, we are inside, we're nearly overlapping the lower, which is not a great sign. Not a great sign at all. Like this morning, we started out, and during the morning, we were higher. Then we were overlapping the higher. Then we were still overlapping the higher. And then right around where we're at now, in the past couple minutes, now we're inside, which means we're looking to range. The name of the game today is ranging, which is exactly what we're doing in a larger perspective. So if we break this value and we really start to make lower value, I mean, we're coming down lower. Maybe we might SFP this one more time and make a Model 3. But really, I'm expecting this. Maybe not that drastic. Maybe we don't come back down there. Maybe we kind of like go around here. Maybe we take this low. You know, who knows? I don't really care what price does, especially without a position. So what would this actually look like if this was this? This would be all the way up to here and then an SFP. Then we wouldn't have even broken this low, so we wouldn't even be looking for key market structure points yet. Cool. Div there. Maybe you could have figured that one out. But the daily value is being squirrely. All right, that's enough of that. I mean, really nothing going on today. It's a hard day to scalp. This one might have been a good one, but you know, ultimately not a. This diamond pattern. If you could just play this super well with SFPs, and you were really locked in with your trade management. You're just buy, sell, buy, sell. I mean, you could really freaking whale this out of the park with reverses. Buy here, start off the position, easy. Come up, value area high, 930. Makes a lot of sense. To reverse from there, we do. We SFP this low. Well, wait a minute. If we're going to go down for the first half of New York Open, we can't allow people to have shorts from here. All right, let's take them out. Oh, and look at that. We just practically had a huge failure at that SFP. We'll go back down now. It's like very funny. Let's check out the sessions on Market Monkey here. So yeah, we're in New York AM. I guess we're still in London session. So we just rejected from New York sessions value area low. Again, we're talking about value. This is where London thought price was fairly valued. And look, it's pretty correctly categorized. I mean, it is retrospective. So New York came in and they thought, well, actually, we think the value of Bitcoin is definitely not where you stupid Brits in London thought it was. So they pushed price down. They sold because they didn't think it was valued that high. We tried to pull it back up, or somebody tried to pull it back up. Maybe it was the Brits. And we came back up to this value area low, and people said, no, it's not valued in this value area. It's lower. So we got rejected pretty strongly. Very cool. Yeah, I like thinking of the composite man as like a Brit, like an American, a strong Uncle Sam type, and then like an Asian guy. It's pretty cool. I wonder what type of Asian market would be. I guess it's all of them. But the Brit is pretty funny. Alright, let's look at some book maps, because I really don't have anything to look at now. What is today, Friday? Excuse me. Let me put book map on. All right, so we're getting very, very granular here. Look at passive buying. I want to compare this to Market Monkey. So on Market Monkey, right around New York Open, we finally had, well, we didn't really have anything of note except for more volatility. And that really came in at 928 actually. It was pretty much flat. It didn't really do anything. Spot stood strong. Spot is like not phased at all by this lower value here. And the book seems to say, look at how much people wanted to buy these tiny little dips in here. That's so interesting. Why? You know why? Were they filling positions in here and they don't really care when we slightly go below price here because they know it's going to be above their entry price? They're going to keep buying down here too. This is almost like a crazy like iceberg limit something. I don't know. Very weird. Very weird how few. Look at this. All these buys looking to try and grab price when it comes down, and just like a single sell that gets filled and really moves price temporarily. Very odd. And then we actually get like, significant market buys or market trades coming in, market volume. Let's see. It looks like people are really trying to buy. People are really trying to buy. It looks like we have a lot more passive buyers than we do passive sellers. This is interesting. Look at this. Look at this flip. I wonder if this could be a buy stop. I wonder if no, this guy wanted to buy, and then it's like he just, I have no idea what this guy was. I have no idea what that even looks like. That's very confusing to me. It's like this was a stop loss, but then he inversed his position and filled here. Something like that. But it seems like we had a lot of passive buyers and like not really a whole lot of passive sellers, if I had to guess. Sellers. You know, people defending the lows. It's like maybe some selling here, but then you have the same amount of buying, really. Yeah, really not much passive selling, I can tell you that. And now we're coming to this very cool, we're pretty much SFPing. Yeah, look at how high CBD is. Excuse me. I just whistled. CBD is really coming up, and where has it been coming up on this for? This has been coming up since right around 9 a.m. It had it folded under zero pressure just a little bit right here at 9:30, to be expected. I'm really surprised at the CVD here. I think that's actually pretty interesting. I guess this is just turning into like a whole day stream. Massive long-term stream. Spots are starting to give up here a little bit. We have a small spot here. Check this out on Market Monkey. So you just saw this same level on Bookmap. You can kind of see like spots are kind of starting to waver for the first time in a while. Like they're kind of just caught in this range here. Not saying that they're in a downtrend. Perpetual, same thing. It's kind of just like I'm hands off, man. There is no market conviction at all. Like I don't doubt that there might be a good trade in here. And maybe it was just this long off of this SFP, but it's like, I don't even... Just really doesn't do it for me. Really doesn't do it for me. Especially, and you know what? It really is because we're just at a point where there's no internal market structure or no... there's just no real market structure. It's like there's nothing to really base it off of. Like you've got this, because this breaks that low. And then you've got this. And it's like this might go like that. Or it might actually break that high with a candle close. It's like, I don't know what to do with it. This is horrible. This is like 15-second structure. 5-second structure. It's like I don't even want to trade this. Gosh. I had such a productive morning. I was in the zone. I was like, yes, I read, I worked out, I woke up when I wanted to wake up. I'm like, I'm locked in, I'm in the zone. I'm ready to come hit the charts and freaking find some good opportunities and take them and not have my stop be too small where I just get, totally slammed. And the market is just not really giving it to us this morning. Not really giving it. Perpetual CVD starting to pick up. Let's go back to Bookmap. It's just the most fun to watch. It is kind of cool that at a certain point you can look at a 5-second chart and the candles aren't like Swiss cheese. And I can't wait to the point where I can apply my skills on like a 5-second chart. But I just don't have the I don't have the volume at the moment, nor like the fast hands. I really need a system like Bookmap to be able to trade off of. I mean, was there really anything good going on here? Was there anything like... So this was 930. So we could start there. SFP'd the high, broke the low. Okay, so then we ranged. Then we broke this high. This would have been a trade right here. I don't know what your entry would have been. We'll have to figure that out. But we did break this high, so if we flip to bullish market structure, then we'd be looking for a platinum pocket with a value area. And look at that, bounce right off that value area. That's your long right there. Stop below the low. And you're looking for mostly out at the high there. I don't know why this is such poor risk reward. This risk reward should be a lot better. Like, is it because it's that nitpicky? Is that why? Yeah, it is. Wow, look at how tight that is. Look at how tight that is. It's like you just move a little bit beyond your stop and you just take profits a little early and your thing is just a little off and it's 2R. It's 2R. But nonetheless. So that would have been your 5-second trade. Let's see what else you could have done. Then we broke that, and then I'm sure this would have been your entry. Let's see where that value area high would have been. And from here, we can really pull all the way. So it would have had to be like there, there, there. Not as good. Not as good. This is just one of my, this is my favorite system, guys. This is, I call it quads. I also call it, quads. I also call it, like a blind platinum pocket. It's up in the air. It's up in the air what you really want to call it. It kind of depends on the higher time frame context. If there is any, it might even be a Fibonacci Rimsey. But I don't know if I would have taken this short. I think the I guess I would have looked at the CVD, and right now the CVD is overtly, ooh, gotta look up that word definition real quick. Let's check it out. Overtly, in an overt manner. Oh, thank you for the definition. Thank you so much. Yielding easy passage. Plain to view, apparent, not covert. Ah, open, manifest. Interesting, interesting. So, this one was, I wouldn't call it covert, but I would call it not overt. Let's look at it covert. covering or cover, a covered place or shelter, hiding place, thick underbrush or woodland. Covert. Covert. All right. It's not really hidden. It's out in the open. It's just not easy. You know what I mean? It's not hidden, but it's not easy. It's not overt. It's not covert. Oh, wow. I just doxed my freaking address. Not completely, but you can't see out the window, so how the hell would you find me? I don't know. We have an automatic turret, okay? It has facial recognition. You can't walk on our property without the cops being called. So paintball if you're law enforcement. Paintball if you're a person, if you're a real person trying to hurt me. Okay, first off, please don't. Second off, why? Third off, don't. All right. Yeah, this short would not have worked out. Same exact platinum pocket setup, but I think here it lacked the conviction of the cumulative volume deltas. I think we're in a more majority bullish environment right now, especially with the Bookmap CBD. Oh, you guys aren't even looking at this. Oh, well, here, hold on. I said, hold on. Jeez. Wow, CBD Wilden. Yeah, so this was like a potential, oops. This was a potential short, and this was a potential long. Same setup, same exact setup. Blind platinum pocket or quads. I call it quads. So quads means you have market structure is 1, Fibonacci zone is 2, platinum pocket. Your value area high or value area low, or POC, if it looks good, is 3. And your order blocks, maybe, if you want them, are 4. What is another name for 4? Quad. Quads. Not to be confused with squats or trying to think of something that rhymes with quads, but I can't really. Or squad. All right. So anyway, let's pick apart why maybe this one wasn't as good of a trade as this long here. I've got nothing to do right now. I'm just staring at the chart. I might as well think about it, talk about it, try to do a breakdown, see why something is good, see why something is bad. I got a text from my boss. Let me respond. You literally did not work on it. Yeah. Let me check my calendar today. All right, so I have a Trader's Digest at, what is this, 3:30? 3:30. All right, let me just massage my forehead and maybe take a sip of coffee. You know what, let me take a little break. How about we take a tiny little 3-minute break? I wish I had a timer. Timer. I don't know if I can just do this in OBS. I don't know. I don't know. Yeah, let's get rid of that. Let's just let's do this. And then we'll break down some of these potential trades. And I want to do some in real time, I guess. Oh, look at that, 5 minutes. All right. All right, see you guys. Whoa. You guys seeing this? Are you guys seeing this run? Wow. This is kind of insane. Holy moly. Oh my gosh. Wow. This is huge. This is crazy. What just happened? All right, well, never mind. We're not going to talk about 5-second charts. We are going to talk about this. This is wild. Okay, let me go over here. Wow, this is pretty wild. I had no idea that we would get anything like this. So, guys, where was the trade? Maybe. I guess it was this internal. I mean, this was a quad setup. Did I take it or think of it? No, not at all. Not at all. I would not have taken this. And I think this is a rather ridiculous run that what I would have never thought. But I mean, check this out. See, it just doesn't really do it for me. The value area isn't in the area we want. Wow. So I'm trying to see what we could have seen for this. Wow, look at the spot buying on here. This is crazy. This is pretty wild. Look at all the short liquidations. We got a short squeeze going on here. A lot of this buying is short liquidations. And you can see it in the, wow, so a lot of people are selling then. So as these shorts are getting liquidated right at the top here, look at how many liquidations you had. Let's say that liquidations and perpetual CVD is a 1-to-1 relation, even though it's not. But on this candle, you had tons of liquidations, and let's say all of those short liquidations drove price. Same thing on here. Big move up from those liquidations. On this one, however, we had even more liquidations. So sellers, these are sell liquidations. They're being forced to buy back at a losing price. It was pretty much all eaten up by take profits, I'd assume. Wow, what a run. Is this all over the market? Yeah, seems like it. Seems like the whole market just went very temporarily green, or very recently green. Uranus. Poor Uranus. Hold on, let me what a run. Did not see this coming today. Let me just quickly check and see what people are talking about here. All right, so yup, distribution. My buddy was looking at the same thing. Yep. So we got to see where we're at in our values now. What is this? Liquidity still sitting at 94 and a cluster around 88 to 89. Currently below VWAP. Also important how this New York Open interact with VWAP. I'm not touching anything until New York opens. Great idea. Wow, actually short looking for a lower this guy had. I like this guy a lot. He's very respectable. Taking a TP at local lows. Out of it, then took more at this 5-minute demand. What time is it? 10:35. Absolutely beautiful signal. Very nice reclaim of value area low. Next would like to see how we react at POC. Blew right through it. Really? Yep. If you want to know how big players are positioning with actual data, you can see watch order flow, watch ES. I was not watching ES. Nice. Yeah, I don't know how you could have seen this coming, but great trade. Lucky guy, lucky guy. All right. Yeah, so, I mean, let's talk about this. Let's talk about, let me put some more music on real quick. I don't really like fusion jazz. Maybe we go with something funky, huh? I'm not really feeling it. What am I feeling? Ooh, I think I know what I want. I'm going to do this one first. And then I'm going to go for some of this. All right. All right. So let's talk about this. It's really hard to say exactly what you should have been looking for here. I was really not expecting this run this quick in this area. It's so funny. I leave my computer and we just start ripping beyond belief. Maybe before we talk about this, we talk about where we might stop, which is going to be a hard question to answer, but I think it's reasonable. If we look here, we are now in maintaining that 30-minute bullish structure. And if you remember this morning, I said I don't really like this 15-minute. I don't think this is very descriptive of the overall trend. I think we, okay, are you going to load? Yeah, I don't think this break is very descriptive of the overall trend. So I've been looking at the 30-minute. So now where we are, both of these POCs just absolutely demolished. This didn't even have a chance. But I'll leave that on the chart because it did have a good reaction. You guys can hear me, right? Yeah. Okay. This 1 hour order block might actually be a breaker block now. And I think I'm going to do that. Just because we had such a powerful move through it and there's not really anything else there. So now we're really looking to stay above here. We'll look for 1 minute stuff in there. But I kind of want to look at what's going on here. Wow, look at this total reset of value. Once we came above, like pretty much right around when we broke that value, complete POC reset, value came back down after making this range. Very interesting. I don't really love the look of any of this stuff. And everything up until here is useless. So we're only looking at here up. This would be a pretty cool high volume node. Maybe we'll mark that in. And this is also going to be some range thing going on here. Okay, what the heck? Yeah, so this value area high right here, or this high volume node, I mean. I'm gonna say it's more like right. No, not that. Okay, buddy, come on. I'm gonna say it's like right there. And let's mark this in. This is gonna be a range POC plus extension naked high volume node. So that's probably where I look. I don't really know what to do with the low volume nodes. If somebody wants to drop me a comment or something, I don't really have any experience with them. I haven't done any back testing and I don't really know anything. Excuse me. This 5 minute was gone. No need to look at that. If we look at any other OBIMs, might have a 15 minute in there, but that's, yep, we got a 15 minute, and look at that, that's where we're rejecting. Let's pencil that in. That should have been in a long time ago. I don't know why I just had that 5 minute in there. So right here, extend 15 minute OB. Anything else? I have that 4 hour, right? I'm going to add that this is a 4 hour. Okay. So we are looking, so we had, wow, great resistance here. And I want to see what this drop is being caused by. It seems like Perpetual is taking profits. Spot's holding strong. Spot is holding strong. So I don't know. Maybe this point of control. I mean, this 1 hour order block is equally a demand zone now. Maybe we do make that a breaker block. I think I said before I don't really want this to be a breaker block, but I think we'll go with it. All right. What you know about that Slav house mix, huh? See if I still like it. I haven't listened to this in a while. Yeah, so wow, we're coming right down to this point of control. Maybe that's where you take a stab at it. Maybe you do something like this. I, again, do not have a system for this, so this would be pretty much all speculation on my part. I'm kind of trying to see where you would have seen this on Bookmap. A CVD, wow, maybe I should have been way more interested in that. It only looks linear. It really only, the CVD only detaches once price really goes exponential as well. So, if we really zoom out, let's see. I want you guys to check this out too. So, if we notice our CVD here, we kind of like had a div here, like a hidden div. I think we were talking about that. But all of a sudden, from starting at 9 o'clock, really, we just had this intense buying. And let's see what it crescendoed into here. Really doesn't look like much. Also, another great example of how the books change at 9:30 on the dot. Look at this kind of like order book scalping here, and then it really just changes big time. What the heck happened to my Slav house music, huh? So, yeah, I mean, I guess this SF. Hold on a second. I don't know what the heck's up with this house. I get a whole lot of weird sounds all the time. I just had like a alarm go off. I don't know what it was. Anyway, it's getting cold in here. Anyway, probably should have taken this SFP, this swing failure pattern, more seriously. And maybe the reason for it being that it was in that platinum pocket. If we just cut back over to TradingView here, I really didn't see anything. Not my system at all, guys. This is not anything I would have foreseen or taken. Look at that. Look at that value area, though. Come on. Come on. Yeah, the only way I can think of playing this is that you would have had to do this divergence. You would have had to play this SFP either as a divergence or as a value reclaim, quite obviously. But it's not very cut and dry. It's kind of difficult. It's like, I don't know, guys. This was a tricky one. You know, not all moves are explainable, but I think it's good to try to explain them. Well, this SFP is, I guess, still there. I tried to explain the unexplainable, and maybe you'll find some layover there, but not even really a .886 tap, you know. You could take a blind platinum pocket if you really wanted to with that, but I'm interested to see what we do down here at this point of control 1 hour breaker block. Maybe you do something, I mean, maybe you get like really lucky with a Model 2. And the third leg of that Model 2 is a market structure break. That would be the only thing I can think of. That'd be your easiest entry in this scenario. The other thing you could do is I really stay away from the lower time frame market structure breaks. I think those are pretty useless. No, they're not useless. Excuse me. I get carried away in the lower time frames. I can't really do it. I can't look less than a 30-second. But what could you have really seen here? Well, we had this weird value area low that was never really tapped, and we tried to push into a lower value, and it looks like this was almost somewhat like an accumulation. You almost have a Model 1 here. Not very obvious, really not very obvious, but it does look, man, I really gotta add Wyckoff models and power of threes are really not in my vocabulary, but I understand them very well. I just don't have the habitude to spot them in real time. But this would have been this could have been a pretty good idea. And now that I see the Model 1, I guess it kind of makes sense. You're below value, you're testing lower, you can't really seem to break substantially the value area low. Your last ditch effort, is this SFP, which forms like a bit of a Model 1. While you do that, you have very positive Bookmap CVD, which, just to remind you of the I want to remind myself what the multi-book is. Binance Futures, Bybit, OKX, and BitGet. So I'm actually really glad they include BitGet in that, because that's not on Market Monkey, and I think BitGet's probably up there in importance recently. I really like BitGet. I use BitGet. And this is the cool thing, I guess, is that you can see the accumulation on these lows. You see we put in this, maybe this is the first low. You see like the high magnitude of buy orders, but you see that on the sells too. So you really have to you got to use your CVD, and you have to know, like, look at how many sell orders. I don't have a drawing tool, but look at how many sell orders. It's like near equal here, but by the time you get to right around here, the sell orders kind of evaporate. And I think you really see that in the CVD. There's no more passive sell orders until maybe here. And then at that point, you're gone. Totally gone. So, very interesting. Look at this too. Look at this little order here that just disappears when we do that that Model 1. Like, it is almost like this algorithm knows that there's a Model 1 and there's no resistance in the order book. I'm wondering if you could have seen this in order book depth as well. And we'll check this out on Market Monkey, but this really would have been the move to make. And you know what? I think your invalidation here, it's not super simple, but I think that you could have even put your low down here under this 2 hour. I think you could have put it, by the time we really re-entered, you know what too? This is a great example. I think we already talked about this today, but this is also that Model 1, re-entering value would have had to be on a very low time frame, like a 15-second. But then you re-enter value and you do check that value area low. And you find support there. So, I mean, maybe even this is a possibility under the value area low. Let me go back to a minute so our thing is actually real. And then maybe you could have done that. But I think really you would have had to see this Model 1, and then you would have had to put the stop at minimum below the low, which is a 232% stop. That's pretty good. But wow, I mean, even then you're only targeting up to the top of the range. And now we're going to come all the way back down. Are you guys ready? Are you ready to come all the way back down? Because it's going to happen. I'm not actually sure, but I mean, this is kind of what I was talking about with the range. I mean, this was an SFP that I wasn't really looking for. I should have been. But that's how you would have had to play this. And I really, really would have only been looking for, I mean, I guess you could have been looking for here, but internally, maximum. Like this is your TP1, TP2. This is your full out leave a runner if you feel like it. And that's if you feel like it. So we almost do like a Model 1 over here. So let me get rid of that. That was a pretty good one. I'm gonna leave that in as the trade of the day. Very hard to see, very speculative, but I think it was possible. I think the theory behind that trade was there. Wow, I've been live for 3 hours. First live ever. You guys are getting tons of content. You're getting to know me. You're getting to know my style. So let's look at these breaker blocks. I mean, these breaker blocks completely didn't do anything. So let's just exclude these as breaker blocks. I don't really know how to use them as well as I think I should. I should probably not use them at all. I really don't use them at all to trade. I really only put them on my chart. Because I feel like it. But I don't really use them as any substantial market understanding. So yeah, let's stop extending that. So if we're coming back down now, you know, this was like a level to look for maybe a Model 1 accumulation. But now, let's see if we have any OVIMs. Besides this 2 hour, really just a bunch of mess. This 3 hour. Really don't like the 3 hour. I don't know why. Maybe it's the number. But really nothing in here. Really, see, it's another one of those things that's just kind of, for me right now, this is impossible to play. Like I don't have a reclaim of VWAP strategy. I really want to see daily value right now. Hold on. Let's get rid of this. I don't really have like a strategy to use here. And the reason being is because I really like to have some very high validation or high invalidation stops. And that's just that. Wow. So check this out. Of daily value, we tried to break up out of this value area. And we're going to stumble around it. These lines aren't going to be perfect at this point. But, I mean, really crazy trying to really smash out of value. Driven by short squeezes. And now it looks like we're getting maybe reacceptance back into the value area. I think maybe we do something like this. or we kind of make like a wider range up here, and then try and make another run for higher value. I don't know exactly what the composite man is doing. But if we switch back to Bookmap, so very, very cool. And look at how badly people wanted to get in this. It's like somebody took a short, put their stop at entry. You see that a lot. Stop losses. Just gunning price. I hope they were stop losses. I hope they were buyer selling. Because if these were sellers opening, then, you know, I mean, geez, you're just getting smoked. You're just forcing, you're just being forced to buy back later. What the hell is this YFI? I don't even know. So yeah, I mean, and look, if some of these finally start to catch, Model 2 right at the top. And these are the Model 2s I really like. Do these guys have a fib tool? No. So this is interesting. Maybe this is something you could have played at the top here. Thank you. This is kind of like a clear-cut distribution at the top here. You are in this 15-minute order block. You're not really anywhere that's super like down to the level, but you can see this pretty hard sell wall at the top here. We get like inducement. You know, people are really starting to fill limit shorts heavy. CVD tops out here. So people are starting to sell here. And then it's like, you know, people, some Joe Schmo in his mom's basement is still trying to buy here. And he kind of gets filled up. But then we make this high at this sell wall. And then we come down, we break structure for the first time probably in that whole thing. It's kind of the only place we had structure. But then we break structure, come back up, classic RIMC, range, initiate out of the range, mitigate into the range. And this is where maybe you're looking for a point of control or a value area high. Maybe that's not the best pull. Maybe this is. You kind of got to play around with it. I really hate, I loathe second fixed ranges. It's like, what? I got to go in here and really do this? Maybe a 25. Yeah, so value area high would have been the thing to use, I think, because this is kind of just unusable. Just like when you have a really flat fixed range distribution, the value area high is, or the point of control is kind of useless because you just, it's like, let's say this is the distribution. It's like, and then there's like a little knob right here. It's like, is this point, where is this point of control because of this little point really, you know, in your face, this is the point of control, like, do not mess with me? No, it's like this whole thing is like a point of control box. Different from something like this, where it's like, okay, whoa, that's a point of control you don't want to mess with. So in these circumstances, which happens very often, probably the majority of the time, the best thing to do is just use the value area. Just use the value areas. Look at how easy it is. We came up, we started to kind of figure out maybe fair value. We can find, buyers and sellers can kind of find a fair value here. We came down to the low, value area low, tried to break higher. The composite man thought momentarily that price was maybe undervalued here, got quickly rejected with an engulfing candle, down back into value, broke below value. The composite said, well, maybe the value's lower. Ultimately got temporarily rejected, touched that value area high again, forming a Model 2, and then we came down. So that's that. Yep, so now we're kind of just messing around here. Excuse me. Five-minute, interesting. Maybe this is where you go for another platinum pocket thing. Let's see if we have a real POC here or if we have to use a value area. Oh, got to use a value area. Where's the value area? Right here. Where's your good zone you want to short from? Right here. And you go right on that value area. Stop above the confirmed market structure point, targeting down. Maybe that's your trade, but I don't really... I'm not this scalpy, guys. I cannot... I really should be doing this type of scalping because you can really ignore a lot of the higher time frame stuff and really hone in on like what makes this setup specifically, excluding any higher time frame points. What makes this good? And I just set this up. I wouldn't take this. I don't have a system for this. But if I saw this on maybe a 1 minute chart, not a 15-second, and then I looked at CVD, really only look at CVD. I'm really not looking at anything else. I mean, because the problem with like open interest, I just don't really find much use for it more than CVD. I just really don't. So here's something maybe to note on Market Monkey here is that this sell-off has been all perpetual selling. This pullback is perpetual selling, and this buyback is perpetual buying. Spot's strong. I don't know if shorts are necessarily the thing to try right now. What I would want to see if I really liked this short more is I'd want to see spot really getting rid of their positions, because now it seems like people are doing long-term holding. You know, they've got their stop well below that Model 2 bottom that we just drove up from. I'd want to see spot really starting to sell off here, giving confidence that maybe this run was just like a stop out thing. And ultimately the plan is to go back down into the previous range and reaccumulate or break lower. But that's not really what I see. I see spots holding on to their bags. Wow, why is Market Monkey so slow? Let's reload this. I see spots kind of holding their bags. I see perpetuals taking profits. And then kind of going back here. And it looks like we just SFP'd this high. Maybe that's something important. We could go back over to Bookmap here. Let's do that. Let's see what Bookmap is saying. Look at all this buying. It's just kind of very lopsided. I need to make an indicator for this. I don't know if I'm going to be able to do it in Market Monkey. I might have to do it in Bookmap. And it really is just, It really is just order book depth, but I think you got to play around with it. Include something like which positions are actually getting filled. Because if you just have spoofing, you know, the order book can look however it wants. So I think what you have to hone in on is you have to figure out how to clarify between when a limit is being filled by a market and spoofing. So you just, anything that's spoofed, you just take it and you just throw it out the window because you don't want to talk about any spoofing. Maybe spoofing can be its own thing. It's like, hey, we're really spoofing, like, for example, right here on Bookmaps. Wow, we have all of these buy limits coming up here, but all of them are spoofs. It's fake liquidity below us. Nobody actually wants to purchase those positions. They just want to make it seem like they want to purchase those positions. So maybe that's where you say, wow, we have a lot of spoofing to the downside. These orders are fake. And actually the orders that are getting filled are like this one. This is not the case, I don't think, but this one, this one, this one, these. There's actually more of a short bias. I think I'm going to work on this today. I think I'm pretty much done trading. After this 3-hour live stream I've been doing, I don't really see a whole lot of opportunity today for any of my systems because we just don't really have any market structure for me to use, so I'm kind of dead in the water here. And here's another thing. Here's what I want to just maybe show you guys about if you were to take this short. Notice how if I entered this and I intended on putting my stop above this high, I'd be stopped out right now. And why is that? Is because that's an unprotected high. There's no market structure rule, or there's no market structure theory saying that this high is the high that has to hold before we go to this bottom. Here's the difference. So you have this right here. So price can come up all the way up to this point here, and even, that's my candle, and even SFP it and still be bearish from this pull, okay? But if we break this level, then we're now bullish and we're looking for a retracement and a continuation. This level, however, in here is not breaking this, doesn't mean anything. The overall order flow objective is not changed. It is still, if you're looking at it like this, coming up here, coming down here. And maybe that's your blind platinum pocket entry. Maybe you make it a quad, you look for an OBIM, you look for some sort of, wow, look at that, a 5-minute. When did that confirm? Oh, wow, what a wild 5-minute. I haven't really ever seen one like this. I mean, I have, but very cool. Very cool. So yeah, so you got to put your stop above this confirmed high. So we're seeing some interesting stuff on Bookmaps here. It looks like we've got kind of a channel developing. Our CVD is not, oh, broke out of that channel here. Let me show y'all. So, and notice guys, this could be a Model 1. Hold on, I got a work text. So yeah, and why shouldn't you have gotten into this? CVD told you all you needed to know. CVD was not nearly bullish enough. You would have wanted to see shorts or I mean spots throwing their bags out the window because they're on fire. Okay, and you would have wanted to see this whole move propped up by perpetuals, which is kind of what you saw. You did kind of have perpetuals driving the buy here. If we look at this, you did kind of have perpetuals driving this buy here, but you didn't really see spot selling. I mean, and here's a question, maybe you should ponder this, because I certainly should. If spots even did this, would that be enough? Where do spots need to be for this to make sense? Do they just need to be below this high? Wasn't the answer. Do they need to be doing this? Well, that doesn't really do much for me either, because then that's just a pullback for a high. What the heck is going on here? What the? So I don't really know what you wanted to see in spots here. I think a short like that is kind of impossible under this pretext. I don't really think there's something I would have wanted to see to get in that short. But anyway, let's see where we're at now. This 5 minutes is technically a breaker block. Do I even want to care about it? What do you guys think? I wonder if oh, I'd have to sign in. Yes. Oh, somebody actually said something to me. I don't know who this guy is. Rap Element. Dude, you're dope. Yo, Rap Element, much love. Much love, guys. I don't that's cool. I don't know who this guy is. But clicking that just broke my freaking Market Monkey. Market Monkey's rough, dude. It's like, look at this. It's just a glitch. My stuff is still here. Like I can still move. Oh, how did I do that? Oh, but it's like a. I think it's a problem with my browser. Actually, I don't think it's them. So I think I'm gonna call it there, guys. I gotta do some TA on Inge. I just got commissioned by my boss. Anyway. I hate when okay, let me talk about one of my pet peeves and then I'll jump off. It's like I really hate when you have a giant move like this and you say something like, haha, wow, didn't see this coming, I didn't see this coming. It's seemingly out of nowhere. And then you get a response like, oh, it was because like FOMC didn't come good, or like, oh, this like Chinese interest rate number didn't hit. And it's like, okay, dude, really? That's why the market moved, really? Like, I'm really not I'm not a fundamentalist. I'm a technicalist. Like, I really think the market moves because the market moves. It's almost as if I believe that all possible information, even if it's not released to the public, is already priced in. So if we have FOMC, I mean, the majority of the time you can look at Polymarket and it's like, okay, we people apparently have a high degree of certainty that they know exactly what's going to happen. So then why afterwards, after FOMC or the minutes, does price even move? Why is there such a volatile reaction? It's not because of the FOMC number. It's because people get bent out of shape over nothing. It's emotional induced volatility. And you know, I guess like a lot of, I guess the bigger point is that a lot of larger institutions actually do have to, you know, use that information when it's really released. But that seems really dumb to me. It's like those are the institutions that are kind of just doing what they do for their customers. Their service isn't necessarily forward-looking or predictive. Their service is just like, oh, now we have to readjust our, you know, ETF. So, it's like it's really not that hard with FOMC to have like the foresight of what the actual number is going to be. It's really not like, you can even take a middle ground stance. You're like, okay, well, it's either going to be no change or 25 basis point change. It's like, okay, well then split the difference for the next day, and so, or maybe split the difference for what's more likely. And you can go on Polymarket to figure that out, or talk with one of your experts that you hire, and then you know, do it ahead of time. But I guess, I don't know, I'm just talking out of my ass right now. But I was told that it was a fake out because the jobs report was the weakest in decades for December. Bad news, and the market goes up because the Fed will print money. It's like really? Do people really think that way? Is that like a thing? Like you know, maybe he's right. A 2.4% move because now people think the Fed's going to print money? Like, are we for real right now? I don't, that doesn't make any sense to me. Maybe there's a reason, or there's like a percentage increase that was caused by that, okay? And I would say maybe it's like 0.5. But the rest of the 2% is because of the technicals, okay? Because we had a Model 1 on the 30-minute, and we're coming down, and then we have a Model 1 inside of here at the value area low. People think it's valued higher. There's like almost a liquidity curve above us. There's definitely one up here, and we have a short squeeze. You know, that's kind of as complicated as you need to get, I think. But I don't know. I'm not a person that knows everything. I just do what I do. So, and there's really no reason to predict, and there's really not any reason to know there's no reason to know the fundamental reason of why something happens. I really only care about the technical reason, like really. Hands down. So, you know, take it for what it is. Don't look too much into it, unless it's TA, because you better know your TA really well. Unless you don't know your risk management as well. Risk management, arguably more important. Kind of goes hand in hand with TA. It's like, you know, Siamese twins, but all right, guys. I mean, that's cool. We'll just take one more look at Bookmaps, maybe see if there's anything interesting. Really nothing on the monkey. Spot buying's picked up on this little leg up here. We saw a little bit more spot volume. We're kind of where we are diverging in spot volume. So lower high between these 2 points. But CVD's coming up on spot. Perps Man, my throat's starting to hurt. Talking for this many hours when you're a yeller like I am. Ah, some big shorts coming in. I haven't seen that color red yet today on Bookmap. I want to zoom in on that. But you can't just look at that and say you know exactly what's going to happen, because you need context, okay? Either this short pressure, all these, these positions are entered short, and then that actually moves the market down, or good market buys come in and all these people get stopped out and it helps to move price up. So it's hard to say. Limits are just kind of like sawdust in a cog machine, or like sawdust in your transmission. They just slow it down. They say, hey, actually, I want to take pause here, fill some positions, and if you got more than that, then you can keep price going. But if not, maybe we'll bounce here. And the market is like just the oil. Just the oil. Market orders, I mean. All right, but anyway, that's pretty much it for me. I kind of want to just look at this real quick, but... I love Bookmap. I really aspire one day to be a completely high-frequency trader looking near only at Bookmap. I mean, no, I like all three of the tools I use now. I actually really like the setup. I find probably the highest value in TradingView. Market Monkey, close second, I'd say. And then Bookmap is just very nice on top. It just gives you something that Market Monkey can't, which is infinite zoom in. You know what I mean? But yeah. All right, well, I'll catch you guys later. 3 hours and 30 minutes. That is the longest stream I've ever done. I mean, I do monologues on another channel occasionally. I do like daily updates and monologues. And maybe those go an hour, hour and a half. Maybe two of them have ever gone that long. So this is pretty cool that I just talked for 3 hours and 30 minutes. Hope I was entertaining. Not that anybody's watching. Hope you got a good perspective in. Go practice. Go read. Wow, look at these cells. Whole order book just shifted. Wonder why. Go read Markets in Profile. That's a great book. Kind of it. That's a great book. Learn market structure. Probably doesn't matter who you learn it from. It's market structure. Go with the old heads. The old heads know what they're talking about. Don't fall prey to like a young kid. If you're watching a video of a young kid sitting here trading, you're doing it wrong, okay? Don't watch me. Don't watch me. Go find somebody else, because you don't want to listen to a young kid, all right? You don't want that. You want somebody old and gray and weathered and withering away, okay? You want somebody that's like at the end of their life, peak wisdom and knowledge. Like just ready to kick the bucket. That's your mentor. That's who you got to find. Not me. Not anybody my age. Not anybody close to my age, okay? You don't want to talk to me. This is all for me. I only stream for talking experience, talking to myself. Talking is just a great way to argue with yourself about what's going on. And I like monologuing. I like to talk, so. But anyway, do not watch this. Do not. Go find somebody old. Go find somebody that's actually smart. Just saying. Go find somebody with experience and wisdom. But yeah, cool. Sounds good, guys. I will catch you all later. Hope everybody has a great day. Oops. Praise the Lord. Jesus Christ.